So, hello, and a massive hello to everybody. I hope everybody's having a great day wherever you may be, whatever you may be doing. This is 50 Pips rocking and rolling here, 4th of March, 2018. No trade calls, no recommendations. Everyone responsible for their own stuff. We're here for educational purpose only. So, Merkel is safe. We're starting to get the first Italian exit polls out. Again, they're notoriously bad, so we'll have to wait and see. But again, shaping up for an interesting week with those things, with Trump, tariffs, et cetera, et cetera. So there should be an awful lot of geopolitical and political risk out there in terms of the calendar. Basically, you could call it central bank week. We've got the RBA on deck, we've got the BOC on deck, we've got the ECB on deck, we've got the BOJ on deck, and we've got non-farm payrolls. So again, should be fairly interesting. The debate, a lot of people still getting excited about, what caused the move in February, the algos, vol strategies, et cetera, et cetera, et cetera. As far as we're concerned, it's quite easy. It's basically the Fed taking their foot off the accelerator. Nothing, don't have to be a rocket scientist to figure that one out, in our humble opinion. So let's see what's going on. Now, where to start? Well, maybe because it's central bank week, a lot of people are going to be focused on FX, right? And we'll have to see what happens on the dollar. Now, we're really not sorry about saying that this is far from clear, right? It's not a super clear picture. So I think it's always hard to distinguish between the charts and possible bias, right? Trying to factor in too many things that are going on. So if we're looking at the chart, I mean, what is the chart pointing to? Well, essentially, we've had the market trying to base here. And, we've had that retracement we're looking at, and the market is very heavy, right, in trend with these moving averages all in trend, the 200, the 100, and the 50. And so far, what's happened, right? Well, essentially, we've moved right back into the 50, and bam, it's got smacked down. So if you're looking at this, and again, this is in line with that previous low, that 91 level. So if we're just going to be very, very disciplined about it, is the outlook is, as long as this holds, this high holds from a closing basis, you'd expect those lows to get tested again, so more dollar weakness. That's it, right? Now, if we're trying to factor in a bunch of other stuff, well, I think you could make the case that this is still going to be choppy inside this range, and maybe we need to see the dollar try and make this move to then really sell off hard. But again, that's not what the charts are telling us at the moment. The charts are still telling us that we're stuck inside a choppy area between this 91 and 88.50s, and that so far, even though it's been a messy bounce here, right, the 50 DMA has done its job. So as long as that holds, you'd expect to see some weakness inside this choppy range, right? And we see a lot of interesting action across the board, and you see how this translates into some of the other charts. Like, for example, if you look at the Aussie chart, and with the RBA, this is going to be interesting, right? Let's see if this loads. So you see on the weekly, we've had this dollar trying to come back into all this area. Is it going to break back through and continue the downtrend, or is that it, right? Are we going to see that weakness come back in, and we're going to continue this move higher, break above the 80-81, and move much, much higher on Aussie? That's the big question. But you see how we're stuck in a tricky area. We've got the moving averages coming inside, starting to flatten out a little bit. So it's just very messy. So I think the best thing we could do is it's kind of a wait and see scenario. It's not something that you'd be waiting to fade some kind of move, right? But it's a key area. You see what's happening here on the euro. We'll have to see how it reacts to Merkel, Italy elections, etc. But is this the end of that little pullback, and we're going to start to see that dollar weakness come back in? We would prefer to think that even if we see a little bounce, we have to correct a little bit more before the next big move. But again, it's an extremely, extremely choppy area, right? Speaking of choppy areas, if you look at, the GBP is fairly clear for now. We looked at this area, came back up into the 200. We said even if it was ultimately going to continue to correct higher, this kind of overshot, and it would be healthy to see that move back to this area. So right here, this is the big bull bear line. This is an easy call for us into the week, right? Bullish above back into the 200, down aggressive for 3250. So that's the risk range we're working with. But one of the ones which is extremely choppy still is Kiwi, right? You see how we've come back. We're still stuck in this choppy area. It's very messy, right? So I wish it would be clearer, but it's very messy. The only one that seems clearer than the other ones continues to be yen, right? Where now that we've broken down, as we said, as long as we can't get back above this breakdown zone, it looks like this is ultimately going to continue to try and make its way back into the 100. Even if it bounces, this looks like the less congested area and the one that has most room to run. So that's probably the most interesting one in terms of the on the currency side. Gold, what we said is we're looking to get long gold, but we wanted to see what we called an ugly flush towards the 1300, right? Now, a lot of people wrote into the blog saying, hey, 50, was this the ugly flush you were talking about into the 1300s to get back long? Not really, right? It doesn't look ugly enough. Here, the 50 DMA is going to be pivotal, bearish above, bullish above, bearish below. If we get daily closes above, we could easily see this try to move back towards the 1350. Below, we'd expect those 1300s to attract, but we expect to see some kind of uglier action down here before we can actually get long. But so far, it's like those equities. I just use these moving averages to guide in terms of bull-bear lines, right? And if you look at what's happening on crude, no big change on crude. It looks like it's going to bounce a little bit. It's going to try and bounce a little bit here. This was the big break. Our base case here is, again, 50 DMA, 100, and the 200, is that still it's going to try and make its way back into the 50 mark. That hasn't changed. So for us, it'll be very interesting to see any move back higher towards this 50 DMA, towards these 6260s. Any failure here for us is a nice opportunity to initiate the next round of shorts for a move back into the 55. Now, what's happening on the equities? Because that's really what's interesting. So we're seeing an awful lot of chop on the equities. Our base case on the ES is still that we're going to complete this symmetrical move and that we're going to see a retest of this trend line, right? So call it, 2450s pretty much. It could be labored. What we said last week doesn't change, right? We said let the moving averages guide. Bullish above, bearish below. So we said hold above the 50. It could try and rally higher into that 28. If it loses that 50, we expect the 100 to get tested quick, right? And as we said this week, if it's going to bounce anywhere, most likely it'll bounce at the 100. So right here inside this choppy area, we're pretty much at mid-range. Intraday, looking at Momo, look at what happens around the 2700 level. That should give you a good idea for action. But right here, we're still stuck. So last week, closed below the 50, quick move into the 100. Here, as the way it's opening here, it's held the 100. Don't be surprised to see this try and test that 50. But that's the area where the bears are going to have to come in and press it down, right? Then we'll have to see if we see a very technical move. Ideally, if you're looking for the shorts, you want to see this rally up, get a chance to sell it, break back down towards that 2600. Any bounces back into the 100, get sold again for a test of the 200, maybe a little bounce, and then bam, goes all the way back down. That's if it's Christmas, going to be Christmas for the shorts. But right now, it's still very, very choppy. Our base case is still that we have to rotate lower. Our base case is that this market is very, very weak. Again, it's just a couple of names propping it up. As we know from that move towards the highs, pretty much 70%, 75, 70, I can't remember what the stat is, 70 or 75% of the SPX gains were tech driven. And you had, Amazon, Netflix, and Amazon and Microsoft accounting for pretty much 50% of the SPX gains, right? To us, that's not a healthy market. And you see that what happened towards the intraday. As soon as Amazon and Netflix, or let alone Boeing, started to lose a little ground, then everything accelerated. You can look at it, and the NASDAQ's been stronger, but look at what happened at the end of last week, right? You see how the NASDAQ held this 50, and this would suggest that it's going to try and rally, but essentially it's just because Netflix and Amazon caught that strong bid. Now, don't forget, Amazon essentially hasn't gone anywhere for ages, right? It's still stuck, look, hasn't really gone anywhere, right? it's just still stuck around that 1500, and this is what pretty much saved the bell. Now, what happened on Friday? If you look at the ES, the Dow, Russell closed strong, but if you look at the ES, Nasdaq, and Dow, the Dow was much weaker, right? Much heavier than the other indices. What happened? Well, basically Boeing all of a sudden is not holding a bid, is holding heavy, and therefore Dow's having a hard time. But again, in terms of the Dow, you want to look at what happens around the 25,000 level. It's still, any bounce here for us is possibly a nice sell as more uncertainty for a move back lower. But again, and if you look at those tech names, maybe we're reading this wrong, but they don't really look like a picture of health, right? Now, what's happening on Apple? Apple essentially is not looking, is not essentially a picture of pure strength and health, right? If you look at what else have we got? Facebook. Look at Facebook. Facebook, not pretty heavy, right? Pretty ugly. Essentially, it's been, from November, has been stalling here, and any breakdown here, even the rally back up, it's just got sold. If you look at something like Tesla, Tesla is really not picture of health. If you go down and look at something like what else? Not to labor the point, but I think it's important. If you look at something like Google, essentially, not exactly close to those highs. And if you look at PayPal, as we said the other day, this was a beautiful little short opportunity, right? On this failure here. So again, we'll have to see what happens on the equity side. We still think that the rallies can be aggressive, but that ultimately this market is not really the picture of health. Now, Nasdaq is the hardest one to play, right? Simply because you've got Netflix, Amazon, all those names. But if you look at the Dow, it's much weaker, right? Much weaker. Really pulled off that 50. And if you look at the pattern, look at these 1, 2, 3, 4 negative days in a row here. Look at even if you look at the ES, this is ugly sell-offs, right? So we still expect to see weakness, even if they're going to bounce. Now, a lot of people wrote in saying, is this the action we saw? Is this against the big bear case? Well, the question is, what do you mean by the bear case? Right? Now, if you're looking for the world to end, well, we wouldn't be looking for that. If you're still looking for a move back into the election day range, well, clearly the action here is not showing a market that's super weak and wants to go all the way back down, right? We still think that the picture is not that clear. Now, truth be told, we wouldn't be surprised if we spend a long time stuck inside these ranges, right? Just before the market decides to do what to do. But here, what we're just looking at is still for completion of this healthy correction, right? Of this correction, and we expect this to complete back into that descending trend line. Now, when we get that completion back down, if we get it rather, we'll have to see. If nothing crazy's happened, well, then that could well be it, and that could be a very nice buying opportunity for the rest of the year, right? If we get into these lows and all hell is breaking loose in Italy, you've got all hell is breaking loose with the Brexit. If you've got trade wars across the board, if you've got Trump being impeached, God knows what, if you've got North Korea lobbing nukes left, right, and center, well, then we're going to say, well, this opens up the room for a much bigger correction. But we don't want to get ahead of ourselves for now. We're just trying to play inside the ranges, inside the levels, okay? So I hope that was useful. That's what we're thinking. As always, all we can do is try and just walk through what we're thinking and try and share some of our thoughts, hoping that it could be useful to whoever's listening. So thank you for sharing. Thank you for liking, as always. If you want me to post any chart, just let me know. Hit me up on the blog or hit me up on Twitter. I'll try and post it. Wishing everybody an awesome week, and let's see what we get. It should be a very, very interesting one, okay? Have a great one. Take care. Bye-bye.